G'day folks, Jim here from FX Charts, Thursday 23rd of January. Well, it's been another fairly steady session really against the majors, unless you were a cable trader, in which case it was fairly manic after the release of the better than expected jobs data. But elsewhere, the euro and dollar Swiss have been fairly steady, as has dollar yen after the release of the BOJ interest rate decision yesterday. So there's not an awful lot to report. There could be some volatility today, though. We've got the manufacturing PMIs, the global manufacturing PMIs, and also the composite and services PMIs out of the EU. And we've got the HSBC China flash PMI, manufacturing PMI, which will be the highlight of the Asia session. So we're going to have a quick look at the charts. And the euro, let's just go to the euro chart. There's not an awful lot to report really. It's stuck between 135.80 and 135.20 really. And I would expect it to remain that way really until the PMI data, and even then we might be stuck between 135 and 136. The market's beginning to look forward to the next Fed meeting on January the 29th. That's when the next decision on tapering will be taken, and the market's beginning to wonder whether the Wall Street article of the other day will prove correct and that tapering will be reduced from 75 to $65 billion a month. So that, if that were to be the case, that's going to be dollar supportive, and we are going to have a look at the downside. But in the meantime, as you can see, the hourly charts are pretty non-committal, as are the 4 hourlies. Now we're sitting beneath some resistance here, and obviously above this 135 for the figure support. I think eventually we are going to break to the downside, but we do need to leave a little bit of room for a break up towards 136, 136 and a half possibly. I don't think we're going that high. If we go to the dailies, we can see the 100-day moving average has proved a bit of a hurdle on the top side ever since we've broken it, and the dailies are pointing lower. So I think eventually we are going to have a look down below 135. And possibly even down here to this, eventually to 133.5. That's some way off, but I think 134.5 is definitely doable. Probably not going below there though before the Fed meeting next week. Dollar yen, really that's stuck between 104 and 105, as I say, and I think we're probably going to have another day of consolidation. The 4-hour charts are pretty neutral. The dailies, which had been heading quite aggressively low, have really flattened out now. So I don't really expect too much on the day. And 103.75 should definitely cover the downside. I don't think we're going there. 104 should probably hold it. And equally, I don't think we're going above 105 today. And even then, 104.75 might cap the top side. Cable, well, that was the interest of the day. It was trading at 164.70 when the jobs number came out. Unemployment fell from 7.4 to 7.1, and that was lower than the expected 7.3%. And we're really just 0.1% now above where the Bank of England had previously indicated that they'd use as a threshold to possibly raise rates from the current 0.5%. Now, I don't think that's likely, and the BOE minutes came out as well today, apart from the jobs numbers, and they suggested that the Bank of England are in no real hurry at the moment to raise rates. So I think we've probably got more of the same, and today I think we're going to consolidate below 166, but probably above 165.30. Now, as we go further out, if we were to take out the January the 2nd top at 166.02, there's not an awful lot to stop it heading up back to this is 166.17 up here. I'm told there's some barrier options at 166.25, which will be protected. But above that, this horizontal red line, that takes us right back to this high here, which is at 167.45, and there's not an awful lot standing in between. So a break of 166.25. Just be wary if you're short. I actually do prefer to sell it into this strength up here for the time being, mainly because I'm a little bit bearish on the euro, and I think we are going to head lower there. But at the end of the day, sterling is in this strong uptrend, so it doesn't really pay to fight too much against it. But as of today, though, as I said before, I think just some trade below 166 and probably above 160. 520, 30, somewhere around there, just to allow the short-term charts to consolidate. But the PMIs will probably be the driver out of Europe later on. Dollar Swiss, well, that's a bit uninspiring. It's holding above the trend line, as we've spoken about in recent days. That's now at 90.70. Sorry, I beg your pardon, the trend line's at 91. If we were to break below that, then I think we go to 90.70, which is this support level, sort of down around here, which we've been to before. I'm not sure we're going to go much below there today. We've got the not only we got the FIBO support there, 23.6%, we've got the 200-hour moving average as well. So I think some more choppy trade. Wait for the PMIs. The hourly charts are neutral, as are the 4-hour charts, really not showing us an awful lot. But the dailies do remain positive, even though it's not all that strong. And I do like the dollar mildly for a break higher towards sort of 91.5 and possibly up here towards this sort of 91, 90, 92 area. That could take a while, and I guess it relies on a better than or a decent PMI number out of Europe. The Aussie, well, the Aussie had a good run after the CPI data yesterday. Got up, reached our FIBO resistance at 88.85. It's come back a little bit since then, and it's sitting around here around 88.5. Now, I think there's some reasonable stops at around 88.30. If we go back below there, and I guess that's dependent on a poor Hong Kong Bank PMI reading, that's expected to be 50.6, but I should say 50.6. And if it's below that, then we might see another test down to the downside. But I don't think we're going below this 87.60 area, and I'd really be quite surprised to see it below 87.85 today. If we can take out, if it's a better than expected reading, we might take out this 88.85 level, head back up here towards sort of 89, the figure, which there's going to be sellers here at 89.20 and again at 89.50. So over the next couple of days, I'm looking for some reasonably choppy trade. Don't think it's going to be all that directional, and maybe we do get it's going to be 88, 89 for the next couple of days. The Kiwi, well, we're just waiting on the where's the Kiwi? We're just waiting on the business PMI to be released. But in the meantime, I think this 83.10 area where we are now will probably remain a bit of a pivot, and overall we're going to remain between 83.5 and 82.5 on the downside. The 4-hour charts, this is a 4-hour chart, reasonably directionless, and the dailies are not much better. So I've not got too much of a view on it either way, and I think the markets are probably just going to be choppy. And this consolidation that we've had to endure for the last couple of weeks, I think that's going to, well, the last couple of months really, going to carry on for the time being. This high here, it's at 84.32. Don't think we're going up there anytime soon. And equally, I'm not sure we're going to revisit 82 in the next few days. So maybe we just chop around here and wait for the Fed meeting next week, which will give us some direction. And if the Fed do as expected and start to reduce tapering, then maybe we see the Kiwi come under some pressure again as dollar strength starts to accelerate. But that's about it today. As I say, wait for the PMI data. In Asia anyway, wait for the China PMI data, and then we've got some more out of Europe. And then later in the day, we've got the US market manufacturing PMI. We've also got some Fed activity indices out of Chicago and Kansas, I think it is, and also existing home sales. So they'll be the drivers for today. So all up, that's about it. Have a very good one, and we'll talk to you tomorrow. Cheers.